But if you look, these corporations that are buying Bitcoin, they essentially are also doing a speculative attack. They have figured out a way to print a currency. That currency happens to be stock, whether it's through converts or equity, and they're buying Bitcoin. So it kind of tells you everything you need to know in terms of they are selling one asset to buy another. The asset that they are selling, they can create.
If there is a rush to produce Bitcoin domestically because of a belief that the government is going to be a buyer of last resort, then there will be enormous investments in energy and energy infrastructure capacity in order to mine that Bitcoin profitably. And the impacts of cheap energy, that will reverberate throughout the economy in the form of consumer welfare and greater industrial production.
Welcome, everyone. Today we're going to discuss how Bitcoin will solve America's national debt and deficit problem, and what the world will look like when it does. Until last year, there appeared to be no political will nor any viable solutions to one of America's most pressing challenges, our growing national debt and structural deficits. This issue consistently ranks among top reasons for pessimism about the prospects for the next generation. Until the late 1800s, government borrowing was naturally constrained to roughly half the value of available gold. But since President Nixon removed the dollar's gold peg in 1971, global sovereign debt has more than quadrupled relative to gold, reaching an unprecedented 6.4 times today, which is 13 times the high old normal. Meanwhile, the dollar has lost 88% of its purchasing power through both printing money and running fiscal deficits. This devaluation is precisely why Bitcoin emerged as an opt-out strategy. It's the first commodity where higher prices cannot lead to increased supply, unlike gold, where rising prices always stimulate more production. Also, unlike gold, Bitcoin can be transferred without permission anywhere, anytime, for minimal cost, addressing the limits and reporting requirements banks impose on money transfers today. While any individual anywhere in the world has been able to opt out of fiat currency debasement by owning Bitcoin, in July 2024, Senator Cynthia Lummis introduced groundbreaking legislation that would allow the entire USA to opt out through a strategic Bitcoin reserve. This Bitcoin Act proposes that 1, the Treasury acquire 1 million Bitcoins over 5 years. 2, fund it by diversifying existing Fed and Treasury assets. 3, hold for minimum 20 years to reduce national debt and strengthen the dollar. And 4, protect the rights of individuals to own and self-custody Bitcoin. Today, we'll explore how the US and the world might be transformed as we assume, for the sake of this conversation, that this strategic Bitcoin reserve does indeed succeed in stabilizing America's fiscal situation. Now, on to the podcast.
My guests today are two exceptional thought leaders, Anthony Pompliano, the visionary entrepreneur and investor who's been at the forefront of explaining Bitcoin's transformative potential to both Wall Street and Main Street. And Matthew Sigel, head of digital assets at VanEck, whose rigorous research on Bitcoin price targets and market dynamics has earned widespread recognition in both traditional and digital finance circles. Matthew, your research published on December 20th went through some hard numbers based on a series of assumptions. And why don't we start just by laying out how it would work if it works, how the numbers work?
Sure. So we assumed that the strategic reserve is enacted and that the U.S. acquires 1 million Bitcoin over the next 5 years. We assumed that the market front runs these purchases once they're invested. And so the purchases would start at roughly $200,000 per Bitcoin. We assume, so right now there's $37 trillion of US federal debt. It's been growing at about 7% a year. We assume that that rate moderates to 5% due to some degree of fiscal discipline that's imposed, maybe through the Doge administration. And if you do that, and then there's a range of kind of compound annual growth rates to assume for Bitcoin. And we have a matrix on our website that you can check out. Bitcoin's done a 50% CAGR over the last 10 years. If it did 25% over the next 25 years, then the value of the Bitcoin strategic reserve would be roughly equivalent to 25% of the value of US debt. So, that's just compounding. If you're growing something at 25% and the debt's only growing at 5%, it's obviously going to eat into it considerably. That CAGR is supremely important. If Bitcoin price only grows at a 15% CAGR, then the value only comprises 5% of the debt growth. So that's where, you have to kind of plug in your own assumptions. We have a long-term supply-demand model for Bitcoin that assumes it is used increasingly as a settlement currency for global trade, between 5 to 10% of global trade being denominated in Bitcoin over the long term, and that central banks own Bitcoin at roughly a 2% weight. They own gold at an 18% weight, so that doesn't seem supremely aggressive. But it's really that 25% CAGR that makes all the difference.
Anthony, what do you think about those numbers? And what are the other reasons that we might want to have a strategic Bitcoin reserve?
Well, I think that the growth rate is the single most important metric. I don't know what it's going to be. Feels like 50% for the next 25 years is probably not the right number. So it'll be something lower than that. And I think the hard part is really trying to evaluate how much Bitcoin is being held by these financial institutions, these corporations, et cetera. I like to think about for every dollar that goes in the system, what is the amplification for market cap? So if I put $1 in and it simply moves the market cap $1, it's going to be really hard to continue to grow at 25% year over year over year. One of the things that could help that is if Bitcoin is actually becoming more and more illiquid, which it appears that it has been, where people, companies, even financial institutions are saying to themselves, hey, I bought this at first because maybe I thought I could make money, or maybe it was kind of short-term speculation, but now I'm a long-term believer, I'm a long-term holder. I'm actually never going to sell. And so as you pull that supply into kind of those long-term hands, the circulating supply obviously continues to diminish. And so every new dollar into the system has this like amplification. And so I think that's a really important concept, is that we do need these long-term holders at size in order to kind of keep the growth rate going. And then the other thing is, if stocks grow at 8 or 9%, then you could make the argument that Bitcoin, gold is another example, should end up coming down somewhere, let's call it, 8 to 10, 12%, something like that. How long that takes will have a significant impact on what that compound annual growth rate is over 25 years. So if we continue to have 50% performance for the next 5 years and then immediately go to 8%, obviously that's not going to be nearly as attractive as kind of a slow decay in that growth rate. And the reason why that slow decay in growth rate is so important to me is it really is a function of how much more capital is out there in the market that does not yet own Bitcoin. And Bitcoin is very unique in that the higher the price has gone, the less risky it has become for the largest pools of capital. So if you were to take a survey of public pension funds, sovereign wealth funds, nation states, insurance companies, some of the largest pools of capital that end up really driving some of these other asset classes, the exposure to Bitcoin is very small, which is a great kind of bullish argument or a potential tailwind for Bitcoin. How quickly will we deplete that? Then that gets into, well, what percentage are they going to put in? If they're going to put in 1% of their assets, that'd be great, but 5% would be better. And so I think that there's a lot of kind of questions along that time frame. And so I think, one of the things that Matthew highlighted is like, we will be able to put a dent in the national debt. How much? I think maybe we can chop the tail off and say it's unlikely that the Bitcoin Strategic Reserve will be able to pay off the full national debt, right? If you think of the numbers that he's using as his assumptions, like those are, I think, pretty fair. And even if you crank on them a little bit, you still don't get there. And so I think that what we should be optimizing for is, can it be part of a broader solution to get this debt problem solved, right? Bitcoin can't be the magic bullet, but it probably can be a pretty good, piece of a larger plan to get the national debt under control.
Mm-hmm. I should add one number to your point on like what is the growth in the stock market over the next couple of decades. No one really knows, but if we use a 7% number, which is kind of the long-term average, if financial assets grow at 7% and BTC grows at 25% for the next 25 years, then Bitcoin's market cap will be 18% of global financial assets. So it will be a meaningful reserve currency. And the 18% is kind of an interesting number because that is kind of the average gold allocation by non-US central banks. And, we're not going around paying each other in gold every day on an individual level, right? But gold is a strategic reserve asset for much of the world.
Which argues that Bitcoin never actually needs to be a medium of exchange necessarily to have the value. And a lot of people talk about that. And
well, on that point, I would even argue that gold is a medium of exchange. Because what are they doing is the largest pools of capital are exchanging value from time to time. They're either buying or they're selling gold. They're just doing it in really big amounts. Mm-hmm. Nobody's buying coffee with gold. And so we've become so accustomed to what is my medium of exchange. I use the dollar for the buying of coffee, that we are trying to overlay that like heuristic onto the store of value. But real estate is not really a medium of exchange, right? Gold. You wouldn't think that, but actually for central banks, it is one of the medium of exchange, right?
It absolutely is. It's a tradable asset.
Yeah, they
Collateral.
do this in a very interesting way. And so I do think that Bitcoin maybe got put in a bucket. And, look, the promise of the white paper was peer-to-peer electronic cash. So rightfully so. People say, well, it hasn't yet become the standard for buying coffee. But I think that as this evolves and we start to see the holders and stuff change, maybe that's the better way to think about it. Is it can be a medium of exchange, but just for these larger, kind of pools of capital, and it's more infrequent and larger transactions rather than, kind of small, very frequent transactions.
The biggest question, a big debate is what happens to the dollar? The U.S. builds a strategic Bitcoin reserve. There's one critic who's been out saying that this is a terrible signal that the United States would be giving to the world that they don't have, that we as a government don't have confidence in our own currency anymore. But the main reason for building a strategic Bitcoin reserve, according to Senator Lummis, is in fact making the dollar stronger. Where do we come out on this?
Yeah, there is an argument out there that a U.S. strategic Bitcoin reserve would signal fear about the future of the dollar, and the market would take that badly. I think that's a very defeatist argument. If you take it to its conclusion, then why should we do anything about our kind of fiscal recklessness? So, currencies are famously an ugly contest, or to change the metaphor, you don't have to outrun the bear. You just have to outrun the guy next to you. So I've always said that Bitcoin is more appropriate for emerging and frontier markets who often don't have control over their own currency or have structurally weak currencies. If the U.S. jumpstarts, a global strategic reserve for Bitcoin adoption, we would just be cementing, our kind of fiscal or monetary dominance. So yeah, I don't love that argument that we should just do nothing and see what happens.
It does seem to me that if you put an asset on your balance sheet that grows rapidly, you're strengthening your balance sheet. That should strengthen the currency associated with your country.
This show is being brought to you by our sponsor, Trueflation. Professional investors and economists, and probably any casual observers, know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $34 trillion in debt. Trueflation collects over 13 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at trueflation.com.
Well, I think you can flip it and say, do people believe in the dollar already? And there's a lot of countries around the world who, without us doing anything with Bitcoin, already are talking about getting off the dollar, using other assets, etc.
Building gold reserves.
Yeah. And so, I think that there's some questions there that exist even before the Bitcoin thing. The second thing is we can look at the historical trend, which is that as Bitcoin has gotten stronger, so has the dollar in terms of its percentage of international trade, in terms of kind of relative strength to other fiat currencies that maybe aren't as strong. And so I tend to believe that things in motion stay in motion. If Bitcoin and dollar are both working together, you add in things like the stable coins that are really driving dollar adoption globally, et cetera. I just think that it's really hard to make an argument that, one trend will continue and the other one's going to like do a 180. But I think, it's kind of where the theory and reality are going to come together. And although not a great answer, we may just have to run the experiment to find out.
Yeah. But one of the most persistent relationships over time for currencies is just simply looking at the relative GDP of the country. So, what are the big currencies? There's dollar, and then there's yen, euro, and pound. And Japan, EU, and Great Britain continue to lose relative GDP share to USD, or US economy, and emerging markets. So the forward performance of those currencies seems to us to be pretty much baked in the cake. And the question is, what's going to fill the void and take market share? Is it going to be RMB? Is it going to be Indian rupee? Is it going to be Bitcoin? Like, those are the choices that we can collectively make. Our argument is that it's better for America if it's Bitcoin, because we can at least capture some of the Bitcoin denominated GDP that will occur.
Well, and that touches on a related subject of dollar as a reserve currency. And there's plenty of worry among some people that a strong Bitcoin threatens the dollar's position as a reserve currency. What do you think of that?
People seem to still want dollars, even though Bitcoin's winning.
Yeah, I mean, I'll just repeat that argument. Like, it's going to be yen, pound, and euro that lose share more. So there can be more than one winner.
I totally agree. A number of my podcasts have been with people who talk about the reserve currency, and it's based much more on the network effect and the overall size of global trade that's conducted in that currency that solidifies its position. But if we continue to run our fiscal house in the way we have been, there's a long-term certainty that it will be eroded. And perhaps in the long term, maybe there is an issue, but certainly not in the near term.
Well, there's an issue right now anyways, over the long run. And so I think the question just becomes, are you going to do something about it or are you not? And there's a lot of people I think believe just like inaction is the best plan. But there's a lot of other people who say, well, we should do something. And it really comes down to like, do you believe we have the agency to improve the situation or not? If you don't believe so, then yeah, we can do nothing. But if you think that we can actually improve the situation, then it begs the question of what should you do? And it's not very good arguments compared to 100%. Bitcoin's a piece of it.
And we have this new invention that, in the last year has suddenly become a possibility. Here's an experiment. Why don't we try this? It'll be interesting to see what happens in Congress. I guess let's take 2 seconds on what the political realities are. President Trump has said that he wants to implement something along these lines. It wasn't actually, his quote wasn't exactly a strategic Bitcoin reserve. I don't recall, but I don't believe, but
national stockpile.
Yeah, national stockpile. What do we think about either the executive branch and what are the constraints, and the legislative branch and constraints there?
The betting odds right now are at 60% that a strategic reserve is established before the end of 2025, and 40% that it is established in the first 100 days. I think that simply reclassifying the 200K Bitcoin that the U.S. owns as a stockpile, might cause that bet to resolve in the affirmative. There's also $50 billion in the Exchange Stabilization Fund, which is a piece of the Treasury that has wide latitude to make transactions that support the dollar or support international trade. that $50 billion is, a meaningful amount, right? So even like a million Bitcoin over the next 5 years, you're talking about maybe $100 billion. So, this can make a dent in it. There's also 5 different states that are now mooting legislative proposals to stockpile
I saw New
Bitcoin.
Hampshire and North Dakota were the last 2 a couple of days ago.
So, our call is that the federal government or one or a number of states will establish a reserve this year. I think that the political dynamics around a federal legislative reserve are more problematic, just due to the wealth inequality and the perception of Bitcoin bros being bailed out.
And I think it's the Senate Banking Committee where the Biden administration crypto person just took a job. And that is a force in the crafting of the legislation and in the committee and subcommittee that would be a natural brake on fast progress. Anthony, you have any feel on what the likelihood of Bitcoin reserve is?
I think it's very high. If there's one thing that I think the Trump family knows, the Bitcoiners give, but the Bitcoiners can also take away. And they've done a lot of support behind his administration. And if he doesn't deliver on campaign promises, I think that there will be a lot of people who are not very happy. And that probably isn't great from a political standpoint. On top of that, I think if you have a president who goes into the White House and he judges the health of the American economy based on the stock market's probably going higher. He seems to now be including Bitcoin as part of that analysis. And is taking credit for $100,000 Bitcoin price, probably going to go higher. And then if you look at his administration, his cabinet, his advisors, his family, they all own Bitcoin. And so whether you say that as, hey, we're sympathetic to this, whether you say that as maybe the cynical view would be he's going to do something to enrich him and all of his friends, all of the analysis concludes with he's going to do it. And so how he does it, when he does it, to what degree of severity does he do it, I think is all up for debate. But I think that is a pretty high odds that he'll actually move forward with it.
Yeah, that makes sense. And on the legislative side?
I think there's a lot of work to be done.
Yeah.
But
it'd be a positive surprise. I'm not sure we can count on it.
But frankly, I don't know how many things would be as big as the strategic reserve. Right? I think that is like the number one thing. Everything else is kind of optimizations. Would it be nice to have the banks be able to custody the assets? Of course, that would, help. Will they not custodying the assets prevent Bitcoin from succeeding? Absolutely not. And so, each one of these things, I think in the legislative process is kind of a nice to have. But the National Strategic Reserve is something that, is such a step function change, both in terms of price, market dynamics, but also I think just psychologically for the greatest, economy in the world to just say, hey, look, we're going to put our weight behind this thing would be a pretty big signal.
So the Bitcoin Act says we're just going to reshuffle the assets that already exist in the Fed and the Treasury, and there's a gold note exchange that goes back and forth from the Fed to the Treasury. Does it matter that much? Would it be a better idea to actually print the money and buy the Bitcoin?
Well, there's better and then there's politically feasible. So revaluing the gold certificates, that's a $700 billion windfall that can pay for a lot of Bitcoin and a lot of other things. Printing the money is, a bit of a more explicit declaration of failure for the dollar. So I think that's less likely.
Might make more sense, but it's less likely.
If you want to buy a lot of Bitcoin very quickly, the speculative attack is probably the best way to do it. There are, a number of things you have to consider in terms of the fallout, how people view the dollar and your, kind of thought process and your intentions. But if you look, these corporations that are buying Bitcoin, they essentially are also doing a speculative attack. They have figured out a way to print a currency. That currency happens to be stock, whether it's through converts or equity, and they're buying Bitcoin. So it kind of tells you everything you need to know in terms of they are selling one asset to buy another. The asset that they are selling, they can create. Well, seems to be working for them. Would the government somehow absolve themselves from doing that? Most of the reasons that they would do that are non-economic.
Michael Saylor's been very articulate about exactly what he's doing. And so if anybody out there doesn't know it, you go listen to him talk about it. But more and more companies are able to copy this model of issuing stock and convertible debt and purchasing Bitcoin at a positive spread. How about we've talked about the dollar. How about the market for U.S. debt? What happens to that as the Bitcoin reserve grows and starts to show it's eroding it's improving our balance sheet by increasing the asset value? How does this affect treasury operations, bond markets?
I think that's going to depend on what happens to GDP. Right now, I think the market understands that fiscal dominance is happening, and I would define fiscal dominance as when the Fed effectiveness diminishes because the interest payments on the debt become so high that raising interest rates actually makes your deficit worse and makes inflation go higher. And the only way to avoid that is to get GDP growth higher than the growth in your debt stock and have the market believe that that's going to be sustainable. And then I think the market just extrapolates, hopefully, a positive situation if we can increase our trend GDP growth. In the absence of that, then I think we're going to deal with higher interest rates and a more volatile macroeconomic picture.
Makes sense, especially until we see that the strategic Bitcoin reserve was large enough to actually make a meaningful difference and change the trajectory of.
Exactly. Yeah. So I don't think the strategic Bitcoin reserve is a catalyst for a change in how the market looks at our debt, unless it's accompanied by an acceleration in GDP, decline in debt issuance.
Anthony, you've spoken in the past about how Bitcoin helps restore, can help transform the financial world. This fits squarely into how does GDP improve if Bitcoin is going up?
My general thought process is just Bitcoin is a free market asset. It wins because it's the best. And we need that general thought process back in the market. We need entrepreneurs who are building great companies. We need innovators who are creating great inventions and products. We need a government that gets out of the way and stops interfering in the market. And so Bitcoin can teach us a lot. But I also think that there's an element of Bitcoin is winning without having centralized control, having a management team, without having a board of directors, et cetera. And so it has really inspired a lot of people to say, hey, look, let me think a little bit more long term. Let me think a little bit more resiliently. Let me think about what are the things that I want to do, that I want to contribute to society. I think those are all, really good kind of positive impacts. The other thing that I would say is when it comes to GDP, actually, one of the greatest things we can do as a country to increase GDP is to return to being risk takers. Everything in our society is built around not taking risk. You have, how many three-letter agencies that prevent you from doing anything that you actually want to do. And so instead, if we can return to risk taking, a lot of the risk taking leads to innovation. It leads to productivity. It leads to, kind of social mobility. And so I just think we can't live in a world where everyone is fearful all the time of if I make a mistake. And instead, we should go back to what got us here, which is embracing risk and saying, hey, look, there's going to be things that are hard. There's going to be things we can't figure out. But if we happen to be successful in this endeavor, it can have a really, really profound impact. And I think that you'll see GDP follow kind of an embracing of that risk taking.
There's also a direct way that widespread Bitcoin adoption could lead to higher GDP in the US. And I think it has to do around energy production, right? So 100 years ago, Henry Ford and Thomas Edison suggested a new money for America where the value of the money would be linked to the agricultural production capacity of the country. And in that way, it would incentivize farmers to, grow more, essentially. And I think Bitcoin can act the same way. If there is a rush to produce Bitcoin domestically because of a belief that the government is going to be a buyer of last resort, then there will be enormous investments in energy and energy infrastructure capacity in order to mine that Bitcoin profitably. And the impacts of cheap energy, that will reverberate throughout the economy in the form of consumer welfare and greater industrial production. So I think there is a linkage here. And that's why you hear President Trump, he rarely talks about crypto or Bitcoin in isolation. He often uses AI in the same sentence and links the energy intensity of AI to Bitcoin. And that's because energy is fungible. And if you build 10 times more than you need, because it's such a fixed, high intensity fixed asset sector, you end up with excess energy that can be used for all manner of productive capacity.
And it highlights that 1/3 of the leg of the Treasury Secretary designate Scott Bessent's plan is 3 million barrels and low energy costs. And that really could unleash a good period of better productivity and economic growth. Let's talk about politics of the United States and what happens when strategic Bitcoin reserve starts actually solving our fiscal problem. What's the social contract? When we talk, there's a wealth effect that's going to happen. It's going to be disproportionately allocated to people who were early, people who were aggressive. Do politicians accept this win, or do they use the win to drive more government?
I think it's no different than any other market. People who are early to buy an Amazon, there's an incredible wealth effect. NVIDIA, I think something like 25% of their employees are worth more than $20 million. Well, they were early. They worked on it, right? That's how a capitalist society is supposed to work, is the people who risk their capital, their time, their energy, and are right, get the reward. And so what is interesting is I think the question comes up a lot from the mainstream media or from legacy finance folks, because the people who are going to generate this wealth are not them. And so it's kind of a new class, if you will, that is rapidly experiencing that social mobility. And I think that's a good thing. I always say that there's many ways up a mountain, and somebody who made money in real estate or made money as a entrepreneur or who made money as a private credit investor should be no better or worse than the person who made money buying Bitcoin or anything else. And so understanding that we want people to have social mobility, we want people to have economic freedom, we should celebrate the fact that this is happening rather than try to critique it.
We made a long shot prediction that if Bitcoin hit 100K in 2024, that Satoshi Nakamoto would be Time Magazine's Man of the Year, right? So the second part of that prediction did not happen, and the fact that it did not happen reinforced a conflicting belief that I have, which is that let's say there's 20% of the U.S. population that are no coiners, that have done some amount of work on Bitcoin and still hate it, right? I don't think that number has fallen, over the last few years very much, right? It only needs to fall by maybe like 100 basis points for Bitcoin to double. And I think what we're seeing is, continued political polarization. There's been maybe a modest reversion, but like Anthony said, trends, tend to persist. And I do think that it is a political question of how to justify taxpayer expenditures on Bitcoin. And the way to solve that is going to be a similar way that we hopefully solve our entitlement issues with Social Security. It may be something like a Bill Ackman idea of just giving every child who's born $10,000 of SPY. and maybe we add $1,000 of Bitcoin to that. And that way the demographics can solve this issue. Every year there'll be old no-coiners who die off and new Bitcoiners who are born. And within a generation or two, it'll be much more widely accepted.
Yeah, I watched an indignant commentator on television ranting about how this would be nothing more than a bailout for Bitcoin billionaires. Sounds great, but man,
I don't know if you're bailing out people who are successful. Usually, you're bailing out companies that are not successful.
Great point.
Maybe the bailout term is the wrong terminology.
Also, my guess is that the more profits you're on in Bitcoin, the less likely you are to cash in because a new buyer comes along if you haven't done it until now. And the best anti-argument to that is that Bitcoin is completely egalitarian. Anybody can buy it any time of the day. Anybody can sell it any time of the day. It's your own decision. And if you don't want to do the work, that's fine. If you do the work and you come up with the conclusion you don't like it, that's fine.
Completely agree.
Matthew, you've been following foreign countries and what they've been saying about strategic Bitcoin reserves and interacting with Bitcoin in any way. What's happening right now, and how would that change when a strategic Bitcoin reserve starts working in the U.S.?
Yeah, we track the number of countries that are mining Bitcoin using government resources. There were four such countries in 2023, and then 3 new countries in 2024. That was Kenya, Ethiopia, and Argentina are all now mining Bitcoin with government resources, whether that's energy or joint ventures. So that was even before, Trump announced his plans for a stockpile. And all 3 of those new countries in 2024 have deals with the IMF. Why is that happening? Because if you default with the IMF, they come in and say, okay, we're willing to roll over your debt, but in return, you got to do A, B, and C. And usually one of those things is raise taxes. So if you're the prime minister or more likely dictator in power in one of these emerging markets and you need to roll your debt and suddenly there's this multinational institution that you can't control that's telling you to raise taxes, it's usually causes a bit of like domestic political instability. It gives your opposition a lot more ammunition to basically call you an enemy of the country. And by mining Bitcoin, you can restore some sovereignty over the money printing press and signal to the local citizens that, there's this other option. So whatever the U.S. does, I think that trend will continue. There's like 5% of global GDP at any given point that is in default with the IMF, for whom Bitcoin is a logical third path. That's separate from the, I'd say, 4 or 5 countries that since the election have proposed legislation to acquire Bitcoin reserves. None of those have come to pass, but they've happened in Brazil. They've happened in Argentina, Poland. So that, there's a number of countries where, any lawmaker can propose anything. So I'm not saying that these are like in the latter stages of adoption, but you can see how when the country with the strongest currency, the U.S. says we're even worried enough about fiscal dominance to start a Bitcoin reserve, you can be sure that our trading partners are following and will likely do it as well.
The country that did the most was El Salvador. Give us a little history on what they actually did and how it's worked out, how it went along the way and how it's worked out.
Yeah. So in 2021, President Bukele made Bitcoin legal tender, meaning it can be used to pay debts, and mandated commercial enterprises above a certain size that they had to accept Bitcoin. And then they also put some public money along with private money, it's a JV of sorts, to establish a Bitcoin mining venture. El Salvador doesn't have particularly attractive energy prices, so their Bitcoin mining is subscale. But they've also been buying Bitcoin in the open market every day, generally 1 Bitcoin per day, and their stockpile is now worth about $500 million, $600 million roughly. So it's 3% of El Salvador GDP, which is meaningful. It's not actually the country who's done the most. So Bhutan has been mining Bitcoin at the government level with their abundant hydropower, and their Bitcoin stash is worth 30% of GDP. So, the sweet spot may be somewhere between that 3 and 30%. But yesterday, Tether announced that they are re-domiciling from the British Virgin Islands to El Salvador. So Tether reportedly earned $10 billion in net income. So that company alone would be 35% of El Salvador GDP. The numbers start to get really absurd. And why can Tether re-domicile in El Salvador? Because El Salvador passed in 2021 a number of legislation paving the way for digital assets, and then also large tax exemptions for technology companies, which they are classifying Tether.
That is going to be one great story we're going to see, in 5 or 10 years. Well, what's happened there? Anthony, the Bitcoin is just one of the elements of the digital world that you've been talking about with a number of guests lately, on how our economy is shifting and how the digital goes beyond just Bitcoin. It includes AI, and it includes enhanced productivity of the economy going forward. Let's talk about that for a little while, because it gets right back to this. It matters to the dollar and a lot of our economy what actually GDP is doing, while Bitcoin's strategic reserve may be working.
Yeah, I just think that we're in the age of automation. And so artificial intelligence is automating away a lot of tasks. Bitcoin automated away not only the practice of monetary policy, but also, frankly, the practice of saving. You just put it on autopilot for people. I think that there's a lot of other technologies that are coming to the market that will automate away various activities. It's a very deflationary force, which actually is pretty helpful to the United States right now. And it also changes as an investor what you need to pay attention to. Many investors have been taught their entire life to pay attention to demographics. And demographics are pretty important, but you may now need to be looking at the production lines of humanoid robots. You may need to be paying attention to kind of the code bases to see how many of these AI agents are being produced. And so those data points may become just as important, or maybe even more important than the actual demographics. And, I don't think people quite understand kind of where the world is heading with this. We tend to underestimate things when we see them. But one of the most eye-opening maybe data points, although anecdotal, is I saw somebody recently talking about, I attended my first meeting where there was more AI agents than humans. And so he said that there was 3 humans that were going to a meeting on Zoom. One of them couldn't make it. And so when he got on, it was him and another human. And then he, the other guy, and the person who didn't show up all had their AI note takers there. And so he said, I looked and I said, wait a second, there's 3 AI bots here and 2 humans. There's more of them than us. And they conducted the meeting, right? And it went away. And so again, it's like this very anecdotal, almost silly example, but it's not hard to see a world where, well, of course, the meetings are going to have more AI bots or, kind of agents than humans. It's just a matter of time, because I'm going to have 50 agents working for me, and they're all going to be doing different activities and different things. And so you start to take that activity and you say, wow, the world's going to get kind of crazy. Like, is there a world where the robo-taxis are taking humanoid robots from point A to point B? We don't think about, kind of those levels of complexity in the intersections of these technologies. But now you start to say, well, is the world designed for humans, or is it designed for AI and for robots? Something as simple as, how do you open a car door? Well, it may actually be easier to design it for the robots than for the humans. And so you start to kind of think about all the follow-on effects of, this world that we're headed into. It's exciting, right? It's I think inspiring, but also, makes people a little nervous as well.
Yeah, it's just like, that made me think of another kind of second order effect to widespread Bitcoin adoption here in the US that could be tremendously bullish for GDP growth. I mentioned the energy story. So there's this concept of Dutch disease. Have you heard of this? When a country has a large exposure to commodities. That tends to crowd out the activity in other parts of the sector, or of the economy, rather. So you get a huge investment in digging the stuff out of the dirt. Because of all the money that comes in, your currency appreciates, and it makes your manufacturing capacity less competitive, and you end up with an unbalanced economy, right? And this is like definitely caused a lot of countries to underperform over many years. In the US, I think we've had a curious version of Dutch disease, which is the reserve currency disease, where we've oriented our country around the production of a financial asset, US dollars and US debt. It's made our currency strong versus our counterparties, and our domestic manufacturing capacity has been hollowed out and sent overseas. And the globalization of the financial system has also caused this disconnect between the local loan officer and the borrower, right? Because if all the debt is just securitized and sold off, then you lose some of that social cohesion where the loan officer knows the guy who's borrowing the money. And I think that if we had like more widespread adoption of Bitcoin and more discipline around the production of our reserve asset, then we'd have less of this unbalanced economy that's really kind of oriented around financial engineering and not oriented around manufacturing production. And if you just have to listen to J.D. Vance asking questions of Fed Chairman Powell a couple of years ago at a Senate hearing, this is how he thinks about the world. So I think that there is a chance for, the onshoring story is already happening, like deglobalization. We're probably like 8 years into it. It could accelerate, but it will accelerate to the US's benefit, I think, if we just relax on the reserve currency obsession that has been the hallmark of this economy since 1971.
What's also interesting, there's been an efficiency of capital among the best, winningest companies in the world that happen to, at this point, all be American. And more importantly, a labor efficiency where you're getting astonishing growth with not a large increase in employees. And you're getting these companies able to invest out of their cash without having to raise debt. And forever, there's been an emphasis, or there's been an ability of great companies to borrow money to grow. And we've had a change in that. And it feels like with AI, we may be able to spread out this efficiency of labor and perhaps capital to smaller and smaller companies. And at your conference earlier last year, there was a gentleman who had started a company with 19 people, and he came into tough times, and he had to get rid of everybody but himself. And now he's got a gigantic company, and he's been outsourcing engineers, and now he doesn't need to do that anymore. And so it's one company, and now he's got multiples of revenue, and he's now managing the AIs to, complete his production requirements. It's fascinating. So it does feel like there's much more exciting potential in the future of the economy, especially, unfortunately for the rest of the world, but fortunately for us, it seems that there's an American advantage that's been growing, as you pointed out earlier. The rest of the world economies just seem to be in worse shape. How about geopolitics of the Bitcoin reserve? We build one, it starts working. What is it that China and other rivals start to have to do? I mean, besides working on their own Bitcoin strategic reserves, but how does this shift the balance geopolitically?
How do we know they don't already have one? Right? Sounds like some countries are coming out saying they do have one. I've seen a number of video clips of different leaders in Russia saying that they're starting to mine Bitcoin. They're holding Bitcoin. They think that Bitcoin is a non-censorable asset. I know other countries
Very true.
They have JVs. They're mining. They're doing things. Bhutan, El Salvador. If you think that only 2 of the 180 plus countries in the world are doing it, you might want to reevaluate your analysis.
Yeah, we didn't actually include Russia in our list of 7 countries because they've never explicitly admitted that they're mining Bitcoin at the government level. Although I saw a story yesterday that Bitcoin mining equipment sales in Russia were up 300% year over year in Q4. That's pretty significant growth. And at the BRICS conference in October, the Russian Sovereign Wealth Fund did announce a planned investment into AI and Bitcoin mining infrastructure throughout the BRICS countries to establish more robust capacity, both for AI and Bitcoin. You have BRICS countries who are now building a competitor to SWIFT. Even within the existing SWIFT infrastructure, RMB-denominated transactions as a percentage of SWIFT transactions went from 2% in 2022 to 4% in 2024. That's pretty significant growth. So I think, and we know from the flows of gold that it's BRICS countries that are buying gold, and developed market investors are selling their gold. So I think BRICS are taking like a multifaceted approach to that, and all of the above except for US dollars.
Earlier, I was comparing the total credit to gold outstanding above ground. I figured that was a better way than trying to guess at what GDP was in 1700 and 1800. And there was data for gold. Can gold do what a strategic Bitcoin reserve could do?
I just saw a story. We run the world's largest gold mining fund, and we have active strategies in gold as well. And the largest gold mining company is Barrick Gold, ticker's gold. They have this big mine in Mali. Mali commandos just helicoptered into that mine and started lifting out tons of gold yesterday because they have a disagreement on how many taxes are owed. So it's kind of, easier to seize the metal itself when it comes to gold. The other story that resonates with me, Argentina has a lot of gold. They've been trying to use it as collateral. They had to charter a jumbo jet and fly the gold to America so that we could certify it as real before they can use it. So the storage, transportation, fungibility, lack of censorship.
I'm going to guess there was a little security cost on that trip too.
I'm guessing, right? Insurance costs. Bitcoin has a lot of advantages when it comes to the fungibility and the uncensorability. And I do think we're going to redenominate, and people will be measuring things in sats before too long. And that'll help for, the everyday person who can't acquire a full Bitcoin.
I think there's a psychological, component with the number, but also there is a learning curve that people have to go through. And so if you want people to learn, you have to incentivize them to get interested, and price going up actually is the best incentive. And so, it's kind of like the marketing campaign for Bitcoin. When the price goes higher, people become more interested.
At least motivated to do the work in many cases. I thought your statistic about the 20%, is that a stat or was that a general observation or guess?
Which 20%?
Sorry, the 20% of people who have done some work on Bitcoin.
I was a guess, total guess.
Me too. Whatever that number is, it's a very interesting analysis that you don't need an erosion of that by very much, and you can have a major swing on the demand side for Bitcoin. Is there any work that you guys are doing that we can tell people to look out for coming up?
Well, we do a monthly report on Bitcoin and then a monthly report on the rest of the digital assets universe. So follow us on social media to get those.
I just write every morning so people can go to pompliletter.com and do my best to explain what I'm thinking.
Yep. And you have a fantastic podcast too.
I don't know if it's fantastic, but I do have a podcast.
The people that you get and the conversations you have are just fantastic. Well, thank you very much. We'll see what unfolds on the Strategic Bitcoin Reserve.
Thanks for having us.
Thanks, Bob.
If you like this video, please hit like, subscribe, and leave any comments you might have. You might also want to check out some of my other interviews. We try to dig into the problems that make Americans so pessimistic about the next generation, but we also interview people whose work doesn't get the headlines, but they make life better for society every day.
Given humanity's steady progress over the last 275 years, it's likely that there's never been a better time to have been born than today. Join us for perspectives on today's challenges and opportunities.